Hi everyone, hope you're all doing well, and today we're talking about the free UK stocks to buy March 2021 edition. And this is the most popular video series that I do on the channel, where I talk about the free stocks I'm looking to buy in the month of March. Always brings in a few new subscribers, so if you are new, make sure to subscribe. And for a like target, let's try and make it a little bit tricky on this one. 500 likes, which I think would be the highest amount of likes on a video on the channel, which would be pretty impressive. So we'll see if we're able to do it. But yeah, I'm going to talk about the free UK stocks to buy March 2021 edition. One company on this list is the one that I am 100% buying. Another two are stocks that I'm kind of thinking about. At the moment, the UK stock market, I am finding it a little bit tricky to find some stocks at probably decent valuations that are great companies. It's very hard to find both of them at the same time. So yeah, if any of you guys have any suggestions for when we get around to April's episode, just comment down below, let me know, because like I say, at the moment I've gone through so many stocks and I find it really tricky, and that's why this video is more like one stock I am buying, but two I'm watching very closely. I need to do a little bit more research on them. Maybe if they get a little bit of a dip, I might buy them, but yeah, it's a little bit of a tricky time at the moment trying to find some UK companies at decent value. So let me know if you know any, that'd be absolutely amazing. If you do want to join my private stock market group, where I do post if I'm buying or selling any companies, there's a link in the description. You join through there, you get notifications when I'm buying and selling. There's a Discord and a few other things on there. And if you do want to start investing into some stocks or UK stocks, there's a link to a free trade account in the description. You join through there, you also get a free share as well. What we'll do is we'll take a look at these free UK stocks to buy March 2021 edition. I'm going to start off with the two that I'm kind of looking at, but I haven't decided if I'm buying them yet, and I'll leave the one that I'm actually buying to last. So we'll take a look. So number one on this list is Hotel Chocolat. So this is a company that has really caught my interest in the last kind of maybe last month, 1 month, 2 months. I've currently not bought it yet. It's one I'm considering. They recently brought earnings out last week, which were very impressive. And as a company as well, this is a company that I have started using quite recent. I bought one of their, well, it was a Christmas present, got one of their velvetizers, and I have to say it's absolutely amazing. It's a little bit expensive. The products to kind of get them back in stock are a little bit expensive, but I have to say it's probably the best hot chocolate I've ever had. So from a customer's point of view, I actually use their products and I think they're pretty impressive. But the other great thing was the earnings report that they brought out. So this is what they brought out, or their interim results on the 2nd of March. Now in here you can see that the revenue was up 11% compared to the financial half, the H1 financial year 20. Now this is quite impressive because in that time you would have had stores open a lot more compared to the back end of the year. There wasn't that many stores open. So I think to have, for a company that was mostly based as like brick and mortar stores, the online growth has grown huge, which I'll show you in a second. But I think that was pretty good numbers to be putting out of for a bit of a struggling year as well. And also, all the other numbers that they came out with was pretty good as well. Now, what was really interesting is it said strong sales growth reflecting growing brand appeal in the UK, US and Japan. So they're pretty dominant in the UK already. What is really impressive is when we start getting into the US and Japan growth. So UK sales grew 12%, driven by increased multi-channel flexibility with online growth, more than offsetting reduction in physical retail stores caused by closures during lockdown and Tier 4 restrictions. UK customer database grew by 38%. And this is the other really impressive thing. USA customer database grew by 170%, and Japan customer database grew by 900%, which is pretty good. 51% of UK sales in the period from direct to customer digital online sales. US sales growth 22% in Q2. And also, Japanese joint venture sales to customers grew 228%. So, yeah, I mean, you can see here that the UK stores are still going pretty strong, which is really good. But the big thing that I'm really liking about this brand is the growth in US and Japan. And they've really done well on the online sales. Like, they've really pushed the digital side of it to help the sales and off-put the kind of store in losing brick and mortar stores. The online sales for the UK side have been absolutely amazing. And what's really attracted me is that US and Japan growth. It's something really special, and I'm really happy they're starting to look outside of the UK. So yeah, the growth plan is very interesting to me. So it is a 500 million market cap company. It's listed on the AIM. Its ticker symbol is HOTC. The stock is currently about £4.10 as of recording this video, and it was just about a £5 stock before this EV situation happened. On a stock market chart, it is a little bit choppy. It has been on the stock market for ages compared to a few other stocks, as you would say. But yeah, the share price has performed quite well. But I think with the when you take in the Japan growth and the US growth, I think that might give it the next leg up to go up to a bit of a better valuation. Now, currently it doesn't have a P because it has had obviously an unprofitable year because of the CV situation. But if we ran 2019's year where they were profitable and they were able to do the same kind of profit as 2019, which you'd probably expect them to do even higher now. They've grown the online sales growth and the Japan growth they have and the US growth, so just take that into consideration. But if we were to run 2019's numbers on it, it is currently trading at a P ratio of about 38, which isn't too bad. Obviously it's a little high, but still I think it's not the worst P ratio ever. And when we look at the company, it's historically grown revenue at a decent rate, and also the profit, it's been more of a profitable company as the years have gone on, and revenue is going to jump a little bit quicker in the next few years, probably due to the international growth and also due to the online sales growth they've been able to do. And it says profit's going to take a little while to recover. I don't think it will do. I think it will recover a lot quicker than that and will be a lot higher than that as well. So I think analysts have that a little bit wrong. So it's not too bad from that point of view. And from a balance sheet point of view, 0% debt to equity. Equity is pretty strong. It used to have some debt, but it's pretty much paid it off since it was an IPO. And also the company's sitting on 50 million cash. So yeah, a balance sheet, it's got a strong balance sheet with a decent game plan and growth going forward. So that's all pretty impressive. And just overall on the insiders front as well, Angus Farewell, who is the co-founder and the CEO, which is always a really positive sign that I like to see, is currently still the biggest shareholder on 29%. So yeah, I think that's always a positive to say that you've still got the co-founder there and also holding a big position in the company. So Hotel Chocolate is definitely one that's very interesting me right now at these sort of prices. I might pick up a small position and see where it goes on from here. But yeah, that is number one. Now number two is a bit of a turnaround play. I was kind of I was thinking about turnarounds, and I was trying to think of like a beverage company that will benefit from nightlife coming back and events coming back. Still can't find one at a decent valuation. So yeah, if anyone has some suggestions in there, but I was kind of looking for a turnaround play that will maybe benefit from the recovery that's going on now in the next kind of 2, 3, 4, 5 years. And yeah, I was kind of looking in the beverage space, but then one company that I used to talk quite negative about this on the channel, and it's not Rolls-Royce, even though Rolls-Royce I'm kind of thinking, okay, now you kind of have a recovery, we have a time frame when we're coming out and engine sales might come back and servicing and everything like that. I might do an updated video on Rolls-Royce actually. But the other one that I always used to slate quite heavy, which I'm kind of looking at now, which is starting to get a little bit more attractive, is Aston Martin. So Aston Martin is number 2. Now this is one that I'm still very unsure on. I still need to do a bit more research, but I'm starting to see positive things about this one. I'm going to look this a little bit further. Now one of my last turnaround plays was Card Factory. And Card Factory is starting to now show the signs of recovery, and I think Aston Martin is very much in its early stages of recovery. Only a few months ago I said this company was horrible, but they're starting to put a few things in place now. I'm like, okay, this is starting to get a little bit more attractive. On the share price front, the stock has been absolutely slaughtered since it came onto the stock market. It's probably one of the worst charts you'll ever see. But the big thing with Aston Martin is that the reason why the chart was and the stock was getting slaughtered and the company was doing horrible was management. I said on the channel, when I first covered Aston Martin, I was like, the management are awful. They need something to change in here. And that's what happened. Management was, we've had a big management change in the company. And we had this new CEO come in, which is Tobias Moraes, and also Lawrence Stroll has took a big massive stake into Aston Martin, and he has a very successful background of turning companies around, and it looks like he could do something very similar with Aston Martin. So with a new management in place that has a positive background as well, it looks pretty good. He's tightened up the relationship between Aston Martin and Mercedes and give them a nice cash injection, which was needed with Aston Martin because the balance sheet was absolutely awful. And as well as that, they've now developed an F1 team, which I think will give them a fantastic marketing side of it. And I've also seen the F1 car and it looks absolutely amazing. So I'm going to say that. So I think that's a really positive move that they're making up there. The ties with Mercedes is really good, the technology side of it. I said one of the big concerns as well, apart from the management team, is like they're not building towards clean energy and clean energy vehicles, and they are starting to move a bit more down to the electric side now by using some of Mercedes technology. I think that partnership is really good that they've got going on there. The F1 team, like I said as well, what they're looking to do is obviously the new DBX that's coming out. So far it looks very successful in the pre-orders, and also there's some signs that we do have from the sales side of it seem pretty strong, and there's a demand there. So it looks like the DBX will be very successful for them going forward. And like I say, when we look into the earnings report that they recently brought out, you know, it was as awful as you would expect for Aston Martin, but the kind of like recovery play that was starting to happen there was kind of interesting because there was some positives in there. Now, if you look from a revenue and profit side point of view, obviously you can see the profit is getting worse and worse. The revenue hasn't grown much, but hopefully the DBX will help the sales go up, and also some of the new models that will come out further down the line. Hopefully as well, they'll be able to claw back losing money, which they seem to be doing a little bit right now. One of the targets that Aston Martin does have is to have 2 billion revenue. I think it's either by 2024 or 2025. So we'll see if they are able to do that. But one of the worst things that they've always had is the balance sheet side of it. You know, 134% debt to equity. And I'm not sure if this is completely up to date, but if it is, 500 million cash and 1.1 billion in debt. So at least there's a lot of debt there to pay down, but at least there's a big heavy cash balance now, which is really useful, and should see them for a few years, you know, not having to raise any more cash, which is good. But you can see Lawrence Stroll here, he has taken the biggest stake in the company by having a 16% ownership right there. And if we do go into the board members, you can see the big massive change around here. You know, if you go into how long they've been in the company for, like pretty much most people in the company have been there under a year. So there has been a massive change around in the running of this company. So I'm going to do a bit more research onto this one, but it is one that is starting to interest me, and is starting to show some positive signs of recovery. So we'll see what happens here, but I think it's definitely one worth having another look into at some point. So yeah, number 2 is Aston Martin. And number 3 is the stock that I am definitely actually buying this month, which has now become my biggest UK holding in my stock market portfolio, which is S4 Capital. So S4 Capital are a marketing company. At the moment, the stock has taken a little bit of a dive as well. So, you know, a little bit of attractive time to go buy. But I think this company will be a really decent sized company in the next few years, like I would say towards a 10 billion market cap, and I do expect the share price to probably go at least above £10 in the next few years for sure. Martin Sorrell is the chairman here. He has a successful background in this industry, previously running a company that had a 16 billion market cap valuation it was, and I expect S4 Capital to get somewhere towards that valuation as well. We won't say too much about the history of everything that went on with the last company he was in, but I think it's kind of him trying to point of view of like, you know, this is how good I am at this sort of industry, and I expect him to kind of ramp up S4 Capital. And like I say, it's a digital only marketing company, and you think about the marketing side of it, budgets have been cut so much over the last few months because of the CV. And I think, well, we have seen some of the budgets starting to come back over the last kind of few months, and I think that they will only benefit from it. Now, at the moment, what S4 Capital are doing is they're being very aggressive on acquiring companies, and because of them acquiring companies, the revenues absolutely exploded. And as well as being involved in the digital marketing area only, that's only going to help growth because they're in one of the biggest growing industries that is out there. And like I say, I think when you look at some of the growth as well that they've had worldwide now and who they're buying, they've acquired some amazing clients because of that. And you look at some of the client lists that they have as well, and you can see them clients are only going to be spending more and more money with S4 Capital as well, which is really good. Now, it's a 2.3 billion market cap company, but this company isn't that old. I think it was only founded like 3 years ago, so to get that sort of valuation is pretty good. Now, when you look at the earnings revenue growth, you can see revenue is set to grow at a massive amount of rate. They could sneak a bit of a profit this year. We'll see what happens, but from a revenue point of view, you know, you don't get many UK companies that grow at this sort of growth rate. And as well, this company's not too bad valued, to be fair. To be growing at this sort of rate and to be only valued at like a price sales ratio of 4 or something is pretty good going. So I think like the valuation for what the growth company you're getting here is really attractive. And then as well, on the balance sheet point of view, very healthy balance sheet, 14% debt to equity. It has got 77 million debt on there, but it is holding 85 million cash. So I'm very happy with that balance sheet, especially for a growth company that is acquiring as many companies as they are to help the growth. It looks pretty good. And on the insider front as well, you've got Martin Sorrell, who is the biggest shareholder in the company as well, which once again, I think is a really positive sign for you as an investor. So overall, those are my 3 UK stocks to buy in March 2021 edition. Like I say, SVAL Capital is definitely the one that I'm buying. The other two I'm kind of thinking about, and I'll see where I go from here, but I am kind of liking them, I'm not going to lie. So I will let you know if I do buy them, but I hope you enjoyed it anyway. Once again, let me know if there's any UK companies you're looking at, because I think it is a little bit tricky to find some at decent values at the moment, but I hope you enjoyed it anyway. Smash the like button if you are new, make sure to subscribe as well, and I'll see you next video.